I think so. We saw a solid jobs number. Just the headline number came in well above expectations. And I think what was really concerning a lot of investors about these jobs numbers was the wage growth. And we didn't see really the pop, the upward surprise in wage growth that I think scared markets a little bit going into February. So I think it was a little bit of a Goldilocks report where we got the growth, but we didn't get that inflationary pressure out of that report as well.
Hey, Sean, what does it mean in terms of the timing for the Fed? March rate hike, and what about 4 hikes as opposed to 2 this year or 3 this year?
I think it maybe dials back the expectation for that 4th hike. I think 3 hikes is something that a lot of investors were expecting going into that February report, saw that upward surprise in wage growth, got a little bit worried about if this inflation really takes off, is the Fed behind the curve and they're really going to have to accelerate how they tighten on monetary policy. But I think now the markets are saying, you know, it looks like it's going to be a little bit more of an orderly increase and that inflation is going to have that smooth upward trajectory and the Fed can move along with its 3 rate hikes that they've done a pretty good job of telegraphing for the year.
All right. I mentioned earlier that this is the 9th anniversary of the bull market. The bull market intact?
It's
been volatile of late.
It's been volatile lately. I think we're going to see a little bit more of that back and forth trade. But I think when you look at just the underlying fundamentals of the economy and the business environment, it remains pretty strong. And I think investors feel comfortable that they can stay focused on holding those equity names, that they had really good returns last year. I think they expect that to continue this year. I don't think it's going to be, well, obviously not going to be the smooth upward increase that we saw last year. I think there's going to be a little bit more volatility. But if you look at VIX coming down around that 15 handle today, so it's settling in right around that average.
And Sean, we talk a lot about equities, but what about bonds? We saw bond yields rise slightly after that jobs report, not settling back a little. But what are you seeing at the retail level for fixed income?
So
where are clients going?
When we look at our clients, when they seek fixed income exposure, they usually use the exchange traded products rather than going in and trying to pick specific bonds or different credit instruments. But we have noticed that they haven't been really so apt to get into the investment grade, and they've been looking at some of the more high yield bond products that are out there.
And you think that's a good move?
I think if you want that yield, I think it's something that they are going to start looking at, especially when rates start to increase. I think if you look at what has been the performance so far this year, investment grade hasn't been doing so well. I think they see a little bit more opportunity for return in the high yield, especially if you're just looking at that headline interest rate.
Would they be better off in emerging market yield, for yield as opposed to high yield domestic?
I think it's an interesting story to look at because when you start to see this global growth become more synchronized, it would be the expectation that emerging markets would participate. And typically when you see investors want to get exposure to a lot of the emerging markets, they do it through those fixed income instruments.
Lastly, Sean, the big headline, corporate-wise, the Wall Street Journal reporting that Goldman Sachs CEO Lloyd Blankfein is prepping to leave the corner office as early as the end of this year. What do you make of that in terms of the impact for Goldman Sachs? Stock is rising today.
I think it's going to be interesting who he chooses as his successor. They have you have one person with an investment banking background, and then you have somebody with a trading background, and they've kind of tried to reimagine their business a little bit since the crisis. So I think it'll be telling who they pick in terms of what they want the outlook to be for the foreseeable future for the direction they're going to take their business. I think you'll see a lot of investors read into what Goldman's overall strategy is moving forward based off who they pick.
Yeah, you're talking about David Solomon versus Harvey Schwartz,
yes.
Both presidents and co-COOs. Do you have any idea which one has the edge?
I think it's a little too early to tell. I know Lloyd Blankfein did brief the board on both of them, saying here's some strengths, here's some weaknesses, but I don't think they're going to try and telegraph that too much. But that's why I think it will be very interesting when they do come out and announce that, what you see a lot of commentators say about, well, this is what we think this means for the direction they want to go.
And what kind of legacy do you think Lloyd Blankfein leaves?
I mean, he's done a lot for that business. He saw him through the crisis, and they certainly had a lot of issues to work through coming out of that. But he's also done a little bit of changing the way they run their business. They've gotten into a little bit more of a technology company feel. So I think he's done a good job of bringing them out of the crisis and positioning Goldman for the next step. And I think it'll be interesting to see who they pick to take the company in the future.
Right, we'll be watching. Thanks a lot, Sean, for your thoughts. Our thanks to Sean Cruz of TD Ameritrade. I'm Fred Katayama, and this is Reuters.